purchase a homeowner's insurance policy in Florida, one of the most important things to understand is your limits of liability. These limits determine how much your insurance will pay if you experience a covered loss, and they impact multiple areas of your policy. So what are limits of liability? Simply put, your limit of liability is the maximum amount your insurance company will pay for a covered claim. This applies to different types of coverage within your homeowner's policy, including dwelling coverage, personal property, liability protection, and additional living expenses. For dwelling coverage, your insurance company typically calculates the limit based on the estimated cost to rebuild your home, not its market value. Things like construction costs, materials, and local labor rates are all taken into consideration. It's important to have enough coverage to rebuild your home after a total loss. For personal property coverage, your limit is usually set as a percentage of your dwelling coverage, generally around 50%. However, high-value items like jewelry, collectibles, or fine art may have sublimits, meaning you might need additional coverage for full protection. Other structure coverage protects things like detached garages, fences, and sheds. The limit is usually 10% of your dwelling coverage. If you have significant detached structures, you may need to increase this coverage. Liability coverage is designed to protect you if someone is injured on your property or if you cause damage to someone else's property. The standard limit for homeowners liability coverage typically starts around $100,000, but in many cases that may not be enough, especially in Florida, where legal costs and medical costs can add up quickly. Many homeowners choose to increase this limit to $300,000 or $500,000, or opt to purchase an umbrella policy for extra protection. Finally, loss of use coverage, also known as additional living expenses, helps you cover the cost if you're temporarily unable to live in your home due to a covered loss. This limit is usually a percentage of your dwelling coverage, ensuring you have enough funds to cover a hotel stay, food, and other essentials while repairs are being made. Why do these limits matter? Having the right coverage limits is critical because if your policy limits are too low, you could be left paying out of pocket for expenses that exceed what your insurance will cover. That's why reviewing your policy with an insurance professional and making sure your limits align with your personal risk tolerance for personal property and liability is so important.